Good evening, everyone. So, next up, I'd like to look at the balance sheet. So, important thing again with the balance sheet, with its layout, you will now have three columns which you use. Before I go into the balance sheet, I just want to give a disclaimer. I raised this point in class, but yeah, I really hate using the specific format of Mr. Mr. Avarap, especially here at the bottom with where we have to add the total values here and here. It really doesn't make it look neat, and there's no purpose to it because these values are actually supposed to be written here, and there are a lot of more values were supposed to be added here, but I'm not going into detail over that because sometimes we have student markers and they just mark from the memo. So if you don't have Mr. Avarab's layout, it's not going to help. So for anyone else watching this that has accounting experience, this is not me being stupid. This is what we get forced to do, especially here. So I really just wanted to get that off of my chest before I go into this layout. Okay, so your balance sheet. The purpose of the balance sheet is to firstly determine the financial position of the business at the end of the year. It's not the same as the income statement. The income statement is only used to see how much money you make, but um, or whether or not was the business profitable, was it making a loss, what, and then this is basically just to see can the business pay off any debts. Should there not be enough money, will liquidation be possible, or will it be enough to pay off the debts of the billing of the business? My apologies. Okay, so started off, we say capital employed. So this section or the balance sheet consists of two sections: the capital employed and the employment of capital. You'll notice I write it in capital letters, even though my handwriting is a bit unneat. But this just makes it easier for you to identify the two separate um, sections of the balance sheet, because the aim is this balance should be equal to this balance. They should be exactly the same. If not, there was a mistake made somewhere or something's not right in the books and someone was stealing your money. So yeah, and it's again the purpose of the balance sheet as well, to see any discrepancies in the work. But you can also just use the trial balance for that. But anyways, so again, this is a format that you have to learn off by heart. You can't just look at it, memorize it, look at it this way because it will change every single time. What's important are these little parts right here in the middle, and I'll explain them into depth now again. So, starting off with owner's equity. Owner's equity, again, we know owner's equity is your owner's interest or stake in the business. So, that naturally means we start with the capital, how much money we put in, and we enter that into the first row, the first column. Then we add net profit or we less our net loss. And this is where the income statement comes in. It's very important. So if you had a net profit in your income statement, you would add net profit to your capital amount because you made money. If you made a loss, you would then less net loss from this amount. So again, whenever it's less, it's minus. Whenever it's add, you add. Or whenever it's something like plus or one there, okay, it's an add. And anyways, so after the capital and you add your net profit or your net loss, you less your drawings. And then you just draw a calculation line and then you write your answer right next to owner's equity in the middle column. Now, we didn't get an exercise with the following part, but if it so happens where we got a loan from somewhere, our long-term liabilities also gets added into the capital employed because we're trying to see where the funds for our business come from. So the top part is just to see where the funding comes from, and the bottom part is to see how that funding was spent. That's why it needs to correspond to each other. So, so yeah, if there are any long-term liabilities, then we add them to the owner's equity amount, And then we write the total amount of these two things up here next to the capital employed. Again, this is not part of our work, but this value is actually supposed to be here. But yeah, and then you're supposed to like make the things like almost when you balance, but I digress. So after we add up these middle two columns, we enter our value here. So this plus this will give us this. If this isn't here, and that's the important thing in accounting, if you don't have loans, this whole part, you don't edit. You won't get marks for it, even if you edit. So then you just do the stop part with these three values, get this answer, and then this answer, seeing as there's nothing else, will be this answer again. The second part of the balance sheet is the employment of capital. Again, this basically means we want to see how you use the money and funds or the funding in the business. So, did you buy equipment? Did you buy land and buildings? What vehicles did you buy, etc., etc. So, with that, we start off with our fixed assets. Notice again with all of this, it just makes it a bit easier to work if you leave a little space in between the indentations when you're adding up certain things. So under the fixed assets, you can have any fixed assets, obviously. So I just use the example of vehicles and machinery. Then you enter their values. Oh my goodness. Oh, I'm so sorry. You enter those two values. Um, you add them up to each other. Then you enter its total amount here in the middle column again. If we had investments, this is also something we didn't see yet, but seeing as we do investments, there might come a time when we have to add the investments into our balance sheet. So now you can see investments, we add underneath our fixed assets because investments are also fixed assets, so to say, because you have to get that money back. It's a long-term asset. So you write investments. I made a mistake here because I completely left out investments. I'm like, oh no, let me add it for if we get investments. So yeah, this would be most now against the indentation, and then you'd leave a little line at the bottom to say, okay, at which bank do you have an investment? And you write that in the first line. You, if there are more multiple ones, all of them in the first line, you add up, and it's total. You'll add right next to the investments thing in the middle column. And you just say add working capital. This is just the money currently floating around in the business, so to say. So then under your working capital, you say your current assets, and this is where the layout started really annoying me, but okay, sorry for complaining so much about it. Under working capital, we start with our current assets, so our bank cash debtors. So any current assets, we add the value, the total values next to them. You draw the single line, and this is where the icky part comes in. Then when you add up these values, you write the total amount of the current assets next to the current assets in the first column. I don't know why we don't write in the second column again, but okay, we write it in the first column. Then when we after we're done with our current assets, then we have our less current liabilities. So our creditors, accrued expenses, income received in advance, all of those things are current liabilities, not long-term liabilities. In this way, it's also important to really know this layout because long-term liabilities, current liabilities, or short-term liabilities. Long-term liabilities can also be said as fixed liabilities, so don't get too hung up on the wording. I mean, they'll use a lot of synonyms for the work, but if you know your work, then you can just translate for yourself, if that makes any sense. But yeah, so then you add your less current liabilities, and then the same thing you did on top of current assets, then you add it right next to the less current liabilities in the first column as well. So then what you're gonna do is you're gonna take this top value for the current assets, and you're gonna subtract this from this. So again, if you had 20,000 here, and this was 5,000, then you take 20,000 minus 5,000, and then you write your 15,000 in the middle column. You see? So right next to add working capital. So your current assets minus your current liabilities will give you your current, I know, will give you your working capital. My goodness, my brain is freezing. But yeah. So then after you have all of this, after your current liabilities, you have it, the answer here from the assets. So again, also, if it's a negative number, if your current liabilities are much more than your current assets, you put this in brackets, or what's easier is if you make a minus in front of it. But sometimes if you have brackets and you're like, okay, no, this is something important. Um, in my case, yeah, but yeah, either works. If you're comfortable with the brackets and you put the brackets, if not, then you just make the minus sign. I come with the minus sign. Yeah, you make the minus sign in front of the thing. So yeah, then the second part, and this is where you have to hope and pray it balances. If you didn't pray up to this part, you are going on dumb luck. But yeah, so then you take your fixed assets, your long-term assets, you add your investments, and then you add your working capital, which will then give you your employment of capital. So then this amount and this amount should balance out. They should be exactly the same. There shouldn't be any difference between them. So again, the important part, whenever you do something like this, please, 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 I cannot reiterate this enough. Focus on the wording. If they say, or if you know inside it says less current liabilities, don't go take your current assets and then you add your current liabilities, because then your thing is gonna be off. This value will be off. Um, this value will be off. So then this value will be off. You see, it's a chain reaction, it's a domino effect. So you really just have to focus and pay attention of that. But other than that, I'm pretty sure if you memorize this type of layout, you should be fine. And especially with my other accounting peeps, just push through. Just ignore it and just push through, because again, um, this it's so icky. But yeah, so that's then the purpose of the balance sheet, and the balance sheet explained. So yeah, there was something else I wanted to say about the balance sheet, but I can't recall it now. So again, just memorize this off by heart. If we always told, if you get waken up at 3 o'clock in the morning, will you be able to recite your balance sheet layout for me? Stuff like that. So it's again very, very, very important. Pay attention to your numbers, especially when you also get here. If you have the composite exercise where you first have to do the income statement and then your balance sheet. So this is so important, because either if they're lenient, you'll get the error carried forward. If they're being rude, they'll just be like, oops, no, wrong. And then this is affected, this is affected, this is affected. So then this and this won't balance because there's a mistake here. So yeah, that's it in regards to the balance sheet.